The Indian equity market had a mixed session on March 25, 2025. Nifty 50 closed at 23,668.65, up 0.04%. Sensex ended at 78,017.19, also up 0.04%. Sectoral performance was mixed. The IT sector led, advancing by 1.3%. This shows growth and confidence in tech companies. Mid-caps and small-caps fell by 1.1 and 1.6%. Investors remain cautious in these segments. HDFC Bank gained 1.2%, showing resilience in banking. PSU banks underperformed, reflecting asset quality concerns. Analyzing sector trends is crucial. Despite gains in indices, market breadth favored sellers. More stocks declined than advanced. The advanced decline ratio showed 20 out of 30 Sensex stocks in the red. Among the Nifty 50 constituents, Ultratech Cement emerged as the top gainer, surging by 3.29%. Bajaj Finserv followed closely with a gain of 2.79%, while Infosys advanced by 2.45%. These gains highlight the positive sentiment surrounding specific companies despite the mixed market performance. On the flip side, IndusInd Bank witnessed the steepest decline, plummeting by 4.59%. This significant drop suggests company-specific concerns may be weighing on investor sentiment. Dr. Reddy's Lab and Adani Enterprises also experienced losses, declining by 2.43% and 1.93% respectively. Beyond the Nifty 50, Brigade Enterprises and RVNL stood out as notable gainers, rising by 7% and 3% respectively. These companies benefited from specific news flow, including land acquisition and contract wins. Conversely, Zomato and IndusInd Bank featured among the top losers, declining by 6% and 5% respectively. Global market trends played a crucial role in shaping investor sentiment on March 25, 2025. Wall Street witnessed a strong rally with the S&P 500 surging by 1.76%, the Nasdaq Composite Index advancing by 2.27%, and the Dow Jones Industrial Average rising by 1.42%. This positive momentum in U.S. equities was primarily driven by strong earnings reports from tech giants like Nvidia and Tesla. Asian markets also traded higher, buoyed by signals of potential easing of trade tensions between the U.S. and China. European shares followed suit, with the Stoxx 600 index gaining 0.4%, driven by improved business sentiment in Germany. This suggests that global economic indicators are influencing market sentiment positively. Furthermore, the Bank of Japan's discussion about potential rate hikes at its January meeting signals a potential shift in global monetary policy. This could have significant implications for currency markets and international capital flows. In the commodities market, crude oil prices remained relatively stable despite ongoing concerns about U.S. tariff policies. Brent and WTI crude both edged up by 0.6% as supply concerns outweighed demand worries. Gold prices slipped due to easing trade tensions and cautious Fed statements. The Indian rupee weakened slightly against the US dollar, depreciating by 0.14%. This is due to dollar strength and India's widening current account deficit. Overall, market sentiment remains cautiously optimistic. Positive global cues and early signs of an earnings recovery are providing support. However, concerns about U.S. trade policies and potential interest rate hikes persist. The Nifty 50 faces resistance at 23,800. A break above this level could lead to further upside. SEBI's decision to ease compliance for smaller foreign investors is expected to attract more foreign investments.